Hey everyone, I am Peter with the Options Wealth Academy, and in this video, I am going to go into a little bit greater detail of the four stages of market tops and bottoms. So let's go ahead and get started. Okay, so welcome to the trading room. So the reason I wanted to start with this video and go into a little bit more depth is because one of the most important aspects of trading options or doing any kind of trading within the stock market, any kind of investing with the stock market, is that you have to have the right mindset. And one of the most difficult things to overcome is fear within the market. Another very difficult thing to overcome is greed, but we'll cover that in a later video. In this video, I want to cover fear because fear is a really big and important component, and we all have it. Even as an experienced options trader, and I've been doing this now for 10 years, I can tell you there's times when I become fearful of the market. So to kind of get you started, let's just kind of take a walk down memory lane here. So for some of you that are in your 20s or 30s watching this video, this may not make a lot of sense or you may not know about it. But for those of you that are my age or maybe older, you know exactly what I'm talking about. And that's the Great Recession. And really what I want to focus here is the bottom portion of this because this is the stock market. And the Great Recession, I didn't know it at the time, but it's really what propelled me into taking my journey on trying to find a better way to invest for my retirement. So if we look at what happened in 2007, you can see the Dow Jones Industrial Average declined by 50%, and then it plummeted even more in the following years, and it got below 10K for the first time ever. The S&P 500 declined by 57.8%. Now these are the two major indices, and that means that individual stocks did far worse. Now I know with myself, my 401k declined just a little bit, I think about 10% more than the S&P 500, so about 67 to 70%. And that is crushing. So one of the things that we teach people in the Options Wealth Academy is how to manage your risk first, because it's these crushing losses that cripple you. That's what takes away from your wealth. And so as great as options are to quickly grow your wealth, you also have to understand that the market is going to have these times. There's always going to be booms and busts with just about every type of investment vehicle, and the market is no different. It has these things. So in this short video, I'm going to teach you about the four stages of the market crash. I'm not going to teach it to you. I'm going to kind of go over it quickly. And if you click on the link down below, you can go over to our website, sign up, and get a free copy of this report. So all you have to do, it's not going to cost you a dime. You just have to give us your email address and your first name, and you'll get a free copy of the report. And just so you know, real quick, I'll cover emails. We do not spam. We don't sell our email addresses. We use them to simply give you information as it's needed. We don't send emails out every week. Trust me, I couldn't spend the time doing it. On average, I send an email out like once a month, or when something significant happens in the market that I think you might be interested in. Okay, so head over to our optionswealthacademy.com. Well, you can just click the link down below. It'll take you to the free special report that you can download. Let's go ahead and dive into it. So let me bring up something else here. So this is a screenshot of the 2007-2009 bear market. And you can see I have different stages labeled here, stage 1, 2, 3, and 4. And so stage 1 is really where we start to see, okay, this might have been the top of the market. Okay, and then as you start going through the stages, you start to see that, yep, that was the top. Now, just to kind of fast forward here, because if I go through this in its entirety and try and teach you this, it will take a long time. So I don't want to do that. I don't want to take up your precious time. But the bottom line here is that we teach our students to get out in stage 3. And actually, the templates that we teach you in the Options Wealth Academy for both our strategies, they're getting you out of the market well below, well before stage 4 even comes into fruition. Okay. But stage 4 is unfortunately when the average retail investor, and we're all retail investors. I'm a retail investor. Everyone that is not an institution is a retail investor. So, but unfortunately, this is typically when many of the amateur retail investors find out, okay, and then they start to exit, where you see this big drop here. And unfortunately, that's horrible because you just booked massive losses. But the worst part about it is that once the market crashes down like that, and you can see how it says bear market bottom, these are tough to spot. You don't know where these bottoms are because sometimes you can have some massive rallies. So, for example, you can see the market came down and it looked like it bottomed out. It had a pretty big rally here and then it crashed down more. It rallied a little bit and then it really crashed down, right? So, you never know where the bottom of the bear market is, but as you read through this report, it's going to show you we have a couple ways of spotting the bear market bottom, and one of them is called the counting method. Now, this isn't something that we developed. It's something that William J. O'Neill developed, and he talks about it in his book. So we kind of broke it down for you, made it easy for you to look at. What's nice about that and what's really good about that is it takes all that fear out of it, and you can use a proven system and a proven blueprint to kind of slowly get back into the market. And I can tell you, unfortunately, as retail investors that just got out here, they generally don't get back into the market until it's getting close to where it was at before it crashed down. So they miss out on all those returns. So the best thing you can do is educate yourself, and that's what we want to help you with. I want to help folks learn how to trade options the right way, the responsible way. Now, let me go over to our broker platform here, and you can see I have a 1-year daily chart pulled up of the S&P 500. And you can see how the market has come down, and now it seems to be bouncing back up. But these are the same moving averages you saw on that other slide I had up, and they're also the moving averages that we talk about in the report that you can get. And so the first sign of trouble is always when prices fall below the 7-day moving average. Now, the market does this quite a bit. You'll see as you backtest the market, you can see how the market goes past the 7-day moving average quite a bit. And so it's not a super alarming thing, but if you're a short options trader, this is one of those technical indicators that tells you to get out. This is when I was trading options on a short-term basis, meaning like 90, 120-day options. Once I had 2 closes below the 7-day moving average, I got out. But when we look at the stages of market tops and market bottoms, so you can see the market's coming down, and it's like, is this the top of this most recent 2023 market? Was 46.34 the top? And based on when you read that document, it's not at this point, because we haven't entered into stage 3. And so you can see stage 1 is when the 7-day crossed down through the 30. Stage 2 is when the 30 crosses down or starts to point down. And stage 3 is when the 30 gets below the 200-day moving average. So you can see it has not done that. It's not even close. So this is most likely just our normal market correction. We tend to have an average 5 to 10% correction each year. It's called average because sometimes it's a 15% correction. Sometimes it's only a 5% correction. But on average, it's 5 to 10% per year. and it usually scares a lot of retail investors and they get trapped during these times. So, but that's it, you guys. That was a real quick down and dirty. Again, click on the link down below. That'll take you over to where you can get your special free report. And we will see you guys in the next trading video. Take care.